Welcome to For Your Information, hosted by Congressman Mike Arcuri. For Your Information is an opportunity for upstate New Yorkers to get an inside look at the issues before Congress and learn how to access services available to you. Each month, Congressman Arcuri will be joined by a special guest for an in-depth discussion on the issues of the day or to explain how the many federal programs and services out there can work for you. And now, here's the host of For Your Information, Congressman Mike Arcuri.
Hello, I'm Congressman Mike Arcuri. Thank you for joining me today for the first installment of For Your Information. Each month I'll discuss an issue or topic that's intended to provide you with a service through my office or the federal government. The most critical part of my job, I believe, is making sure you have all the information about federal programs and services, from veterans benefits to getting help preparing your taxes. And the best part is most of these services are available to you at no cost. But before we get into today's show, I want to remind you that you can always contact my office for assistance with a federal matter by calling toll-free 1-800-235-2525 or by visiting my congressional website at www.arcuri.house.gov. Today my first guest is Verlinda Paul from the IRS, and we'll talk about the Earned Income Tax Credit, or the EITC. Earned Income Tax Credit is the federal government's largest benefit program for working families, a way to put money back into your pocket. In New York, average returns are nearly $2,000 a family, but 1 in 4 eligible taxpayers still fail to claim the EITC despite free tax help. Verlinda, thank you for joining me.
Thank you, Congressman Arcuri. It's a pleasure to be here, and more importantly, it's a pleasure to have the opportunity to talk about the Earned Income Tax Credit with you and your constituents.
Great. Well, you came all the way up from Atlanta, so I know it's a little colder, a little chillier here, but thank you for making the trip up, and thank you for the work that you do. Could you tell us a little bit about the Earned Income Tax Credit?
Certainly. The Earned Income Tax Credit is a refundable credit, meaning that it's one that will not only reduce the citizen's tax liability, but also can provide a substantial refund.
Now, when you say provide a substantial refund, supposing the amount that you pay for this is in your taxes is actually less than the amount of the Earned Income Tax Credit, what happens then?
You would receive a refund, and that's the important part of this credit, is particularly in these hard financial times, this can provide a real boost of financial resources for low to moderate income families and individuals. And it's such a timely topic. Right now, as people are preparing their tax returns, they need to really consider whether or not they may qualify for the Earned Income Tax Credit.
Well, you know, I think in this time where we're talking about economic stimulus and we're talking about ways to put more money in people's hands so that they can spend it in a way to stimulate the economy, obviously programs such as these are important. And now, this program has been in existence for quite some time, has it not?
Over 30 years. The original intent was to provide not only an incentive to work for low-income workers, but also to give them some relief on their Social Security taxes.
Okay. And the thinking again was that if they give them the incentive, if they lower the amount of taxes, people would be more likely to work and then to get some refund actually for the work that they're doing.
Exactly.
Great. Now, exactly who is eligible for the Earned Income Tax Credit?
There are not only income requirements, as we've discussed, but also there is a requirement to file the tax return and claim it. And in order to do that, both the taxpayer and if they have a spouse and any qualifying children would need a valid Social Security number. Earned income, as we mentioned, would consist of either wages or salaries or even self-employment income.
Okay. So now, supposing that my wife and I are both working and my wife loses her job, is it still something, and my income is low, should we still file our income tax?
Absolutely. You bring up an excellent point. One of our groups that we found are least likely to file because they don't even know they're eligible are those whose income levels may be less than the current thresholds for filing a tax return.
And that's what I meant. I mean, obviously we have to file our income tax, but if it's so low that it wouldn't, automatically qualify.
Exactly. You may not have a requirement to file because of for income tax purposes, because you may be below that threshold with the standard deduction and exemptions that you wouldn't normally be required to file. But this group of people may be entitled to anywhere from $3,000 to $4,000 simply by filing a tax return when they normally wouldn't have to. So this is why it's so important to get the word out to this group of folks.
So that's money from the government that they could be entitled to that they never even know of.
Exactly.
Verlinda, do you have any estimates? Does the IRS have any estimates of how many people would be entitled to a refund under this program and don't file?
Well, we estimate, based on our research in past years, that 1 in 4 filers, or rather eligible individuals for the credit, don't file. And it could be because they're not aware of their requirement or their possibility of getting this credit, or it could be that the law is somewhat complex, and so they may not know how to claim the credit. So we do have various free assistance that can help them do that. One, of course, is at irs.gov. We have a website, and at that website it's called the EITC Assistant. It's an automated tool which allows them to answer a few questions about income and family status, and that would give them information on not only whether or not they're eligible for the credit, but also an estimate of how much the credit might be.
Any idea why it's overlooked so much by people?
Clearly, it is a complex credit with several rules that may prohibit people from even knowing they qualify. The other thing that happens is that, as you mentioned, last year many people lost their jobs, may have gone to part-time work. Their incomes may have reduced them into the thresholds of being eligible for the credit, when before they wouldn't have even considered it. So new entrants into eligibility, we suspect, will be a real problem if people don't know about it.
Now, in our district, we have a lot of people who are retired, a lot of people who are elderly. What's the likelihood of a person who may be retired or maybe just doing a little bit of work and maybe receiving a pension? Are they eligible for earned income tax credit?
They just might be. And one reason is because they may be caring for a disabled individual, and that may qualify them if they do have earned income. They may be grandparents or relatives of a qualifying child that they're caring for, and that may enable them to take advantage of the credit.
What about people, and we hear this a lot now, especially with the economy the way it is, people who are retired that take part-time jobs. They go do a little bit of work and they make a little extra money. They have to file taxes, obviously, based on that, on the money they make. Are they possibly eligible for earned income tax credit?
They just might be. We have, in addition to the qualifying child, there are 3 categories. There are individuals without children that may be entitled to as much as $438 of credit. There are the individuals or couples that are caring for one child, and there's a different income threshold for them. And then there's the individuals and couples that are caring for 2 or more children. And that threshold, of course, is our highest threshold, and that's $42,000. And it's important for anyone under $42,000 to really consider going to that EITC assistant or to other free forms of tax help and to determine whether or not they would qualify. In the case of the elderly individual, as you mentioned, if they fall into the category of caring for 1 or more qualifying children and have earned income, they absolutely would need to check this out because they most likely would be entitled to the credit. In the case of individuals without qualifying children, they would need to be age 64 between age 25 and 64 in order to claim the credit.